I'm Jack. Today we're going to do some basic ratio analysis, financial statement analysis on 10 companies from 2 different industries. This is for Finance 451. The two industries I picked is the oil industry and the technology industry. So basically, 2 of the very important and big industry that's in our life every day. We all drive cars and we all use computers and stuff. So let's just see how they're doing financially, give you a deeper understanding of how each company is doing. First of all, we're going to start with the shell of the oil industry. What we want to see here is what's driving the ROE. That's what we care about. And the tax burden, interest burden, that's not up to the company. The leverage ratio, that's not up to the managers. We want to see how the managers and how they're managing the company. So we're looking at what's driving the ROE, what you can change to change ROE. So we're looking at operating margin, asset turnover. That's what we're focusing on. And we want to see how they're going throughout the years. So for Shell operating margin from 2009 to 2013, you can see they had they started and ended around the same 5, and you can see at 2010, 11, and 12 they went up. So keep that in mind when we look at the other companies. So we want to see if this is just this one company or as an industry as a whole, they're having the same trend throughout the years. Looking at asset turnover, you see the same thing going. It's going up over the years, but you can see its highs in 2011. And you can see how that drives the ROE. Remember how, keep in mind how the ROE started at 9.4, ended at 9.8. Its highs almost double in 2011. And you know what's driving the number now. Everything else is pretty much consistent. So both operating margin and asset turnover is driving the ROE for Shell. This is Shell's EVA. The company made about 10 billion net profit, not operating profit after tax. The investors expected about 19 billion, and that gives you a negative 8.7 billion EVA. So if I was investing, I wouldn't invest in Shell. Their EVA is negative by a very large negative number. Next, we're looking at ExxonMobil. We're going to focus on the same thing, operating margin, asset turnover. And you see the same trend again in 2011, is where everything, or 2011, 2012, everything's higher than 2013, 2009. And you want to know what's driving the numbers. And I would say they did the best in 2011, even though they had higher ROE in 2008, because look at what's driving the ROE. They had a higher interest burden right here, and that's what's driving the ROE in 2012. We're looking at their operating margin and asset turnover is the highest in 2011. And that is pretty much the same thing as Shell, steady up and down over the last 5 years. Looking at ExxonMobil's EVA, they made about 25 billion net operating profit after tax, and the investor expected about 20 billion. So yeah, they should be happy with a positive EV of 5.1 billion in an industry that I would say is somewhat struggling. They're still doing very well in terms of EVA. Next up is BP. First of all, keep in mind the interest burden negative in 2010 after the oil spill. And everything else, you can see highest operating margin in 2011, highest asset turnover in 2011. ROE is high right here because, well, you had a negative number right there. So I would say they did the best in 2011 again, just like the other 2. But look at what happened in the last 2 years. Operating margin dropped in half, and that's just bad. And asset turnover stayed steady, but ROE has been decreasing. It's driven by the decreasing operating margin. That reflects in the EVA. You can see they made 11 billion net operating profit after tax, and investors expect 17. So they're not doing very well in terms of EVA. Next up, we have Chevron's. Once again, focusing on the operating margin and asset turnover. 2011 seems like the trend for this industry. Everyone's doing very well in 2011. Highest ROE, highest operating margin, highest asset turnover. And overall, you can see Chevron is I would say increasing, even though everyone else, the entire industry is decreasing over the last 3 years, but they still ended better than they started in 2009. And as the turnover is going down, they might be getting more asset. That could be why ROE is going down. It's being driven by these numbers, operating margin, asset turnover, but they're still going up from 2009, even though 2011 was the best year for everyone in this industry. Chevron's EVA, they made about 15.2 billion net operating profit after tax. Capital charge almost 16 billion with a net of 727 million. For smaller companies, that could be a very big number, but for a company that's making 50 billion right here, we can almost call it a break even. Considering this industry as a whole is pretty much struggling for the last 2 or 3 years. Now we have ConocoPhillips. Once again, you see them. They're the only company that's held it almost steady from 2011 to 2013. The ROE went up. They're the only company that's going upward. Looking at the past 2009, they did really bad with a negative operating margin, they lost money. But once again, our operating margin highest in 2011. ROE, well, it's low in 2011, but it's driven by, I would say, the low asset turnover right here, because the asset turnover dropped by over half. So it could be they either bought a lot of asset or they lost a lot of income. So yes, I would say they're the only company in terms of ROE that's improving, but let's take a look at their EVA. I'm not sure how they have a negative net operating profit after tax when they have a positive ROE that's going up. But you can see in terms of EVA, they are not doing well at all. They did not even make profit after tax. So something's driven these numbers. I'm not sure why. They seem like they were improving over the years, but we only looked at ratios. We didn't look at the exact number that's creating the ratios. So keep that in mind when you look at ratios, because sometimes you end up with something like this. Comparing the 5 companies in this industry, keeping in mind that this entire industry as a whole is decreasing. As an investor, you look at Exxon is the only one with a positive EVA. However, their asset turnover operating margin is decreasing through the years, especially in the last 3 years. But considering everyone is having that problem, I wouldn't say that's a bad thing for Exxon, because everyone else is decreasing. You're looking at Chevron right here with the operating margin. Keep in mind that these numbers, they're all related. That's what's driving the ROE, these 2 numbers. So even though they have a lower asset turnover than Exxon and still a negative EVA, we can just call it even because they're making 15, 16 billion. They're heading in the right directions, even though a negative EVA, but in this industry with an average negative EVA, they're doing pretty well. So as an investor, Exxon, number 1, Chevron, I would say number 2. Everyone else is a bad idea to invest in. Next up, we're going to look at another industry, the technology industry. We all use computers every day, so this is another big industry. So let's take a look. First up, we have Apple. Very big company, operating margin in the 30s, 20s. You can see it's higher in 2011 like the others, and same thing with asset turnover. But overall, operating margin has been held steady. Asset turnover has been decreasing. For ROE, I would say they are same as the oil industry, highs in 11. They ended up about what they were 5 years ago. So as a company, they're steady. I would say they're steady. Maybe the economy had a boost in 2011, but let's take a look at EVA so we know how the shareholder feels about it. Looking at 40 billion net operating profit after tax and capital charge of only 14.7. They're doing very well. 25.6 EVA, 25.6 billion EVA. So you can see the numbers for this industry is much higher. It's much higher industry, much bigger industry, and you can see the number driving it. This is a very good number. It's over 25.6 billion. Next up, Microsoft. Looking at their net operating margin decreasing throughout the years slightly. Same thing as asset turnovers decreasing slightly, resulting in a ROE decreasing every single year. So Microsoft is going downward, but these are still good numbers here. Asset turnover is kind of low. They might have a lot of asset doing a lot of research or whatever, but operating margin is over 30%. That's still very good for operating margin. ROE 26 from 43. Yes, they're decreasing, but let's see how they're able to hold up in terms of EVA. Remember, Apple had over 40 billion net operating profit after tax, while Microsoft is about half of that, and about half of their capital charge, resulting in about half of the EVA. But in terms of how much net operating profit after tax and capital charge, they're in the same ratio as Apple, just on a smaller scale. So as an investor, even though they're going downward, they're still doing very well here. So maybe they're putting themselves back up. Google, another very big company, operating margin decreasing every year. That might be a trend in the industry. Asset turnover slightly higher than Microsoft, and ROE pretty much slightly decreasing every year. So that could be just the industry, the operating margin is going down, more competition, everyone's selling at a cheaper price because computer technology is very competitive today. And let's look at the EVA. The capital charge higher than what Microsoft had, and net operating after tax lower. It's a 4.08 billion EVA. So they're not doing as well as the other two in terms of EVA. They're a smaller company compared to the other two, but they're still doing, compared to the oil industry, they're doing very well, Google. So just keep in mind, all these companies are going downward, at least in the last 3 years or 5 years. So if you're an investor, you want to keep that in mind. Amazon, obviously something went wrong right here. Operating margin of 1, that's not very good. Asset turnover is very high, could be because they have very little asset. So ROE, you can see they lost money in 2012 and going down from 23 to 3 in 5 years. You can see what's driving that. That's the operating margin and interest burden right there. They're not making nearly as much money. So you can see what's driving the numbers. And that reflects it in the EV, only 384 million compared to 40 billion of Apple or 20 billion of Microsoft, with 1.5 billion capital charge, with negative 1.18 billion EVA. So Amazon not doing very well, both in EVA and financial ratios. Lastly, we have Oracle. They're the one who makes links. They are the only one with an increasing operating margin. It's a very good operating margin too, over 30%, high 30%, almost 40 right here, with asset turnover staying around the same as Apple, 0.4, 0.5. And you can see the ROE very steady throughout the years. So looking like, compared to the other 4 big companies, they're very big. You haven't heard of Oracle, not everyone has heard of them, but looking at their ratios, they're doing pretty well in the last 5 years. And in terms of EVA, yes, they'll be a smaller company than Google, but still surprisingly almost 12 billion in net operating profit after tax. So even though maybe not everyone here heard about Oracle, they're relatively still a very big company, looking like they're not paying a lot of tax at all right here, and with the overall 5 billion EVA. So they're still doing very well compared to the other companies. And here we go, we're comparing them. They're doing better than Google in terms of EVA, and they're doing better than Google in terms of operating margin. So you can see this industry as a whole is better than the oil industry. Looking at over 14 billion EVA, 9, 5, for it's Amazon only one obviously doing something wrong right here, and just as an investor, if I were to pick one company, obviously I'm going to pick Google. They're doing very well, very high numbers, consistent operating margin, and then you have everyone else on another level, and Microsoft, Google, Oracle, even they're all doing very well. So this is a very good industry. This concludes our presentation. Thank you very much.